Welcome to this video, and in this very section or session of the course, I'll be taking or talking on the topic identify swing high and lows in real chart, right? So that is the topic we're going to discuss in this very video, and I'm very sure this terms is a very familiar term, right? But sometimes we retail traders tend to ignore what forms the basic, the foundation. There are some traders that you come across that are applying these basic principles and it's working for them very well. So it is always good to fall back to this foundation if you want to have a clear trading journey or carry out your technical analysis properly. So in advanced price action trading, understanding swing high and lows is a cornerstone of market structure analysis. What is market structure? Market structure is simply a pattern that price form. This is the structure we're talking about. Swing high, swing low, swing high, swing low, and so on until price experience a reversal or change of direction. So these points reveal where the market changes direction, just like I said. So in this case, you can see price was moving on an uptrend. The structure was forming clearly until it experienced the breakout, retest, then bearish continuation, which started with a very strong bearish drop. At this point, you can see the size of the candle, how it looks. It shows that sellers were fully in charge of the market after the breakout. So okay, align traders to visualize trend strain, reversal zone, and potential entry or exit areas. This structure or a swing is going to give you a clue of where to enter and exit trade. So you can agree with me, as long as this very pattern on the screen is concerned, this is a selling point, this is a buying point, selling point, buying point, selling point, buy point. So you know that if you jump into this trade to buy at this point, then your next target location to fix that take profit should fall within the region or space that the next possible points or swing points that the price will contact with this trend line. So that is basically what that statement means or points at. So a swing high is a price peak formed when the market makes a temporary upward move and then reverse downward, right? I've pointed at swing high, swing low. A swing low is a trough or bottom formed when the market makes a downward move and then reverse upward. Together, this swing build the market reading. So that is basically what you need to know. This is a swing high, swing low, swing high, swing low, which in other terms you can list this higher high if you want to consider a trend line strategy, then higher low. So that's swing high and swing low, and this constitute or form the market pattern that we are seeing in the market every blessed day. So understanding this swing is going to give you an edge, right? Knowing clearly that this is a demand zone, right? And this is a supply right here. Demand zone, and this is a supply zone. So this is basically your entry point. It's basically your entry and take profit points depend on the direction that you're trading, right? This key level swing high and low form both the entry and then the target point. So understanding how price are swing over a period of time is going to help you align your trade properly with institutional traders, right? So these things are very important and we should not take them for granted because it's just a basic. Everything, there's nothing that you're going to do in this life without paying attention to the basic or the foundation. There's no way that you can succeed. So identify a swing, look for clear turning points. Use candle confirmation like wicks or engulfing candles. There are other candles type which are listed area which you can also use, and avoid minor noise. Higher high and higher lows indicate uptrend, while lower highs and lower lows shows downtrend, right? So this is the interpretation. Higher high, higher high. I've illustrated that then higher low at this other side. That is in the case of an uptrend. Then in the case of downtrend, this is lower high, this lower low, lower low. So these points collectively form the market structure that we're seeing every day once we open the chart, depend on the time frame that we are using. Knowing this, identifying this is going to help you align with institution because this is an order. The swing that you're seeing is simply a collection of block order by institution. What does that mean? And a typical illustration is, let's assume you have a US central bank, right? And also Switzerland central bank. These two financial institutions, this very one want to execute an order, buy or sell the US dollar with volume worth, let's say 40 million, and this one is coming with, let's say, 30 million, but this one is coming to buy, the other is selling, right? Let me say this is a buy order. I'm trying to make an illustration for us to understand what this swing simply stands for. So what will going to happen in the foreign exchange market in this case? Sorry, this is a sell. One is a sell. Right, what is going to happen in this scenario? One section cannot take over the whole market for a whole day. So this order is going to be split in phases or batch. What does that mean? US central bank come to sell. So the market is going to go in first. This sell might be a US dollar selling volume of 20 million at this point. Then they give Swiss central bank opportunity to also buy, let's say, $5 million before another institution step in sell, another step in and buy. That is what form the market structure. I'm sure that illustration is clear. So that is how they are going to execute this order until they finish the volume that they came to execute to buy or sell. And while these two are done, there are other institutions that are behind that are joining forces with them. While these ones are selling, other institutions are joining forces with them to sell as well. So these are people that move market. You and I cannot really make impact in the market, right? The impact retail traders make in the market is this: just a consolidation, indecision zone. Our presence is not felt in the market, right? Because we don't have the required volume to create that impact. So these guys are the owners of the market. Our activity is to try align with them. So once you understand these basic principles, you see how you are going to your trading is going to go. So there's no need seeing this kind of market structure or swing high and swing low, and you decide to place a buy trade at this point and take profit top here. This is mission impossible, right? I'm sorry to use that name. This is mission impossible. Let's trade here out of greed. Those swing traders can do it, but if you are a scalper or intraday trader, this is very careless, decision, because noticing the structure, how the price has moved, the swing high and swing low. If you take an entry at this point, then your take profit target point should be within the next possible zone that the price will form another swing high. So this is a very possible target or setup to achieve in a day and go your way. Can come back some other day or move to another currency to look for a smooth entry as well. So common mistakes include counting every candle retracement as a swing and ignoring time frame alignment. Swing analysis helps traders divine trend direction, plan entries, and manage risks, right? So just as a rate, every price movement is not a swing. Where is the point and mover? Okay, excuse me. I'm looking for exactly. This might not really be a swing, though this one hard time frame, right? You can see this movement. Can't really call that a swing. What is that? If it is a swing, we're supposed to have at least three buy, candles, right? In the direction, because you're expecting a pullback at that point to form a complete swing if this was a swing, right? So the main swing took place after the break of this structure. You can see this, the swing here. So this one is not valid. This is not, I think, valid. I think I'm going to talk something, excuse me, on valid and invalid, pullback. Excuse me. I will say something on that so that we can know when we see a proper swing, whether that swing is valid or invalid. This is not a valid pullback. You can't call this a pullback because the candle that's supposed to lead a pullback is supposed to appear at least three, and it should be strong. The volume should be strong to a certain level. So if you take this as a swing, you're likely to make wrong decision. You can see it clearly. This is a valid swing. So the complete structure of this movement is not this way. That is wrong. This pullback is not an invalid. So that swing doesn't count. This is a clear price swing for this structure complete. You can see the buy that took place. This can be called an order execution. You can jump into this buy and you make serious profit out of this movement, right? But where are you going to place entry here? Where are you going to aim with this? So you should be able to identify valid and invalid swing as long as the market is concerned. I will do something on valid and invalid pullback still in this course. That wasn't part of the module of this course, but for the sake of clarification, we are going to see that as we progress. So in summary, swing high and lows are the language of market structure. Mastering them allows traders to interpret market intent accurately and anticipate reversal or continuation without indicators, right? So when you pay attention to this price swing, you are going to know what is going to happen next. In this case, the price swing was taking place, swing high, swing low, then all of a sudden, this is a breakout. We simply indicate a change of direction, right? After that, valid pullback. This pullback is valid. We test the trend line return, then this. So that's basically all on identifying swing highs and low in a real-time chart. That's why I don't use sketch or already prepared a diagram to explain this. I go to TradingView. This is a live market chart to illustrate this. So that's all on this topic. See you guys in the next video. Thank you.